Hey, crypto family, welcome back to Boni's Life, where we decode the markets so you don't have to lose sleep over your portfolio. Well, at least not as much sleep as usual. I'm Boni, and if you're new here, hit that subscribe button because we're about to dive deep into what might be the most pivotal week in crypto this year. Now, I know what you're thinking. Boni, every week you say it's pivotal, and you're absolutely right, but this time we actually have Jerome Powell speaking at Jackson Hole, Ethereum hitting new all-time highs, and enough market drama to make a soap opera jealous. So grab your coffee, settle in, and let's break down exactly what happened, what it means, and most importantly, how you can position yourself for the week ahead. Bitcoin is currently trading at $114,769. And yes, I still get a little dizzy saying numbers that big. Our technical analysis reveals some fascinating patterns that would make even the most seasoned trader do a double take. The MACD is currently below the signal line, indicating bearish momentum, which might sound scary. But remember, in crypto, bearish can turn bullish faster than you can say diamond hands. What's particularly interesting is that Bitcoin is trading below its 21-day moving average, suggesting short-term bearish sentiment. But here's where it gets spicy. We're seeing support levels at 113,302 and resistance at 119,035. Think of these levels as the bouncers at an exclusive club. Price wants to get in, but it needs the right credentials. Now, let's talk about Ethereum because, oh boy, has ETH been the star of the show. Currently sitting at $4,750, Ethereum just achieved something that crypto historians will be talking about for years. It broke its November 2021 all-time high of $4,866, reaching a stunning $4,885 on Friday. That's like breaking your personal best at the gym while everyone's watching, exhilarating and slightly terrifying at the same time. But here's where my technical analysis gets interesting. And I promise I'm not just throwing around fancy terms to sound smart. Ethereum's technical indicators are showing the same bearish signals as Bitcoin. MACD below signal line, price below 21-day moving average. It's like having a party while the fire alarm is going off. Fun, but maybe pay attention to the warning signs. The RSI, that's the relative strength index for those keeping score at home, is showing some interesting patterns. While we couldn't get a clean reading due to recent volatility, the overall momentum suggests we're in a critical decision zone. It's like standing at a crossroads where one path leads to the moon and the other leads to, well, let's just say it's not the moon. Volume analysis tells us another story entirely. Bitcoin's average daily volume is sitting at a hefty 51.87 billion. While Ethereum is pushing 28.34 billion. These aren't just numbers, they're votes. Every trade is someone saying, I believe this price is right, or I think you're all crazy. And right now, the votes are coming in fast and furious. Now, let's talk about the elephant in the room, or should I say the Fed chair in Wyoming. Jerome Powell's Jackson Hole speech on Friday was like watching a master magician perform. 1 minute crypto was bleeding, the next minute, it was celebrating like it just won the lottery. Powell said something that made every crypto trader's heart skip a beat. Downside risks to employment are rising, and the balance of risks is shifting. In Fed speak, that's basically saying, hey, we might need to cut interest rates. And crypto? Well, crypto heard money printer go brah and decided to throw a party. The market reaction was nothing short of spectacular. We saw $140 billion added to the crypto market cap in just 1 hour. That's more money than some country's entire GDP moving around because one man in Wyoming suggested that maybe, just maybe, borrowing money might get cheaper. It's like the entire crypto market was holding its breath, and Powell finally said, you can exhale now. But here's where it gets really interesting from a fundamental analysis perspective. The market is now pricing in an 85% chance of a Fed rate cut in 2025. That's not just optimism, that's borderline euphoria. Meanwhile, Morgan Stanley is over there saying, hold your horses, the Fed might not cut at all. It's like having two weather forecasters, one saying sunny skies, the other predicting hurricanes. The CME basis funding rates surged to 9%, the highest since February 2025. For those wondering what that means, imagine if suddenly everyone wanted to borrow your car and they were willing to pay premium prices for it. That's essentially what's happening in the Bitcoin futures market right now. Now, let's hear from the people who've been doing this longer than most of us have been alive and who somehow still have hair left after years of crypto volatility. First up, we have Matthew Siegel from Van Eck. And when this man speaks about crypto, even Bitcoin stops to listen. Siegel is maintaining his $180,000 year-end Bitcoin target. Yes, you heard that right. $180,000. That's not a typo. That's not me being overly optimistic after too much coffee. That's a serious institutional analyst saying Bitcoin could more than double from current levels by December. But Siegel isn't just throwing numbers around like confetti at a New Year's party. His analysis shows that 92% of on-chain Bitcoin holdings are still in profit, even after the early August dip to $112,000. That's like saying 92% of people who bought Bitcoin are still smiling when they check their portfolios. In traditional markets, that kind of profitability distribution would be considered miraculous. Here's something that'll make you appreciate the institutional adoption we're seeing. Exchange-traded products and digital asset treasuries added 54,000 and 72,000 Bitcoin respectively in July alone. That's 126,000 Bitcoin, worth about $14.5 billion at current prices, just casually being absorbed by institutional players. It's like watching whales feed, except these whales wear suits and have Bloomberg terminals. Siegel also pointed out something fascinating about market structure. BTC dominance fell from 64.5% in early July to 59.7% by mid-August as Ethereum gained market share. This isn't just a number, it's a story. It's telling us that while Bitcoin is still the king, Ethereum is making a serious play for the throne. It's like watching a chess match between titans. Now, let's talk about Gareth Soloway, a man who's been reading charts longer than some of us have been reading books. Soloway has over 26 years of trading experience, and he's saying something that should make every Ethereum holder pay attention. Ethereum could move higher, above $5,000, but then a larger decline could be in store. This is what I love about real technical analysis. It's not just number go up or number go down. Soloway is essentially saying Ethereum might have one more party before the hangover hits. It's like your friend who can predict exactly when the party is going to get shut down, but still enjoys the music while it lasts. And then we have Michael Saylor, the man who literally put his company's treasury into Bitcoin and somehow made it work. Saylor is predicting Bitcoin could soar 10,000%. That's a 100-fold increase that would put Bitcoin's market cap at around $250 trillion. Now, before you start planning your retirement, remember that $250 trillion is roughly the value of all global financial assets combined. So either Saylor is seeing something the rest of us aren't, or he's been spending too much time in the Bitcoin echo chamber. But here's what's interesting about these expert predictions. They're not all singing the same tune. Crypto Rover expects Ethereum to hit between $7,000 and $9,500. Crypto Bull thinks XRP could surge to $7 to $8 in the coming weeks. It's like having a panel of weather forecasters where one predicts sunshine, another predicts rain, and the third predicts it might snow money. The institutional sentiment is equally divided. Goldman Sachs is predicting 3 interest rate cuts at the remaining FOMC meetings in 2025, while Morgan Stanley thinks the Fed will stay put. It's like having your parents disagree about your allowance. Someone's going to be disappointed, and it might be you. Let's zoom out from the charts and the expert opinions for a moment and look at the bigger picture, because crypto doesn't exist in a vacuum, though sometimes I wish it did, because then we wouldn't have to worry about things like inflation, employment data, and politicians making decisions that affect our portfolios. The Federal Reserve is at the center of everything right now. We're looking at potential rate cuts, which historically have been rocket fuel for risk assets like crypto. When borrowing money becomes cheaper, investors start looking for higher returns, and crypto suddenly looks a lot more attractive than a savings account paying 0.5%. But here's the thing about rate cuts: they're usually a response to economic weakness. So while crypto might celebrate cheaper money, we need to ask ourselves, what economic conditions would force the Fed to cut rates? Are we looking at a soft landing, or are we heading for turbulence that makes crypto volatility look tame? The employment data that Powell referenced is particularly interesting. Rising unemployment typically leads to rate cuts, but it also means fewer people have disposable income to invest in crypto. It's like being offered a discount on a Ferrari while your salary gets cut. Technically good news, practically complicated. Globally, we're seeing interesting developments in crypto regulation. The Genius Act that Van X Matthew Siegel mentioned could reshape payment infrastructure and stablecoin regulations. This isn't just bureaucratic paperwork. This is the foundation being laid for crypto's integration into the traditional financial system. Mining dynamics are also shifting in ways that would make a geologist jealous. US-listed miners now control 31.5% of global Bitcoin hash rate, a record high. This isn't just about mining efficiency. It's about geopolitical control of the Bitcoin network. When you control the mining, you influence the network, and when you influence the network, you have a seat at the table when big decisions get made. The AI integration story is particularly fascinating. TeraWulf secured a deal to host 200 megawatts of AI load with FluidStack, backed by Google. This is crypto mining companies diversifying into AI infrastructure. It's like your local pizza place suddenly becoming a tech startup. Weird, but potentially brilliant. All right, this is where the rubber meets the road, or in crypto terms, where your analysis meets your wallet. Based on everything we've discussed, let me break down some practical strategies for the week ahead. And remember, this isn't financial advice. This is educational content from someone who's made enough mistakes to write a book about them. Strategy 1. The Fed Watcher's Approach. With the market pricing in an 85% chance of rate cuts, we're in a high sensitivity environment. Any Fed official who so much as clears their throat in a dovish manner could send crypto flying. Conversely, any hawkish comments could trigger a sell-off faster than you can say transitory inflation. For Bitcoin, watch the $113,302 support level like your portfolio depends on it, because it does. If we break below this level with volume, we could see a retest of the 109,623 secondary support. On the upside, breaking 119,035 with conviction could open the door to new highs. For Ethereum, the technical picture is more complex. We're in uncharted territory above $4,885,000, which means traditional technical analysis becomes more art than science. Gareth Soloway's warning about a potential decline after reaching $5,000 should be taken seriously. Consider taking some profits if ETH approaches that level, or at least tightening your stop losses. Strategy 2. The volatility play. Remember that implied volatility is at just 32%, well below the 50% one-year average. This compressed volatility is like a coiled spring. When it releases, the moves could be explosive in either direction. Options traders are paying attention to this, with call premiums up 37% month over month. If you're comfortable with options, consider strategies that benefit from volatility expansion. But if options make your head spin faster than a washing machine, simply be prepared for larger than normal price swings in the coming weeks. Strategy 3. The institutional following strategy. Follow the smart money, but don't be the last one to the party. ETPs and digital asset treasuries are accumulating Bitcoin at a pace that would make a vacuum cleaner jealous. When institutions are buying 126,000 Bitcoin in a single month, it's worth paying attention. However, remember that institutional money can leave as quickly as it arrives. Keep an eye on ETP flows and corporate treasury announcements. If the buying slows down or reverses, it could signal a change in institutional sentiment. Strategy 4. The diversification defense. With Bitcoin dominance falling from 64.5% to 59.7%, we're seeing capital rotate into altcoins, particularly Ethereum. This suggests a risk-on environment where investors are willing to venture beyond Bitcoin. Consider having exposure to both, but remember that altcoins typically fall harder than Bitcoin during corrections. Strategy 5. The Risk Management Reality Check. Here's the most important strategy of all: position sizing and risk management. With all this bullish sentiment and expert predictions of massive price increases, it's easy to get caught up in the euphoria. But remember, the market can stay irrational longer than you can stay solvent. Never invest more than you can afford to lose, and always have an exit strategy, whether that's taking profits at certain levels, setting stop losses, or simply having a predetermined timeline for your investments. Having a plan is more important than having perfect market timing. For those of you who like your analysis with a side of precision, here are the specific technical triggers to watch in the next 24 hours. Bitcoin triggers: break above $116,500 with volume could signal continuation to $119,035. Break below $113,302 could trigger stop-loss selling toward $109,623. MACD crossover above signal line would be first bullish momentum signal. Volume above 60 billion would confirm any directional move. Ethereum triggers: break above $4,900 could accelerate toward Soloway's $5,000 target. Rejection at current levels with volume could signal the correction he warned about. Watch for any divergence between ETH and BTC, independent strength or weakness. Options expiry levels around $4,800 could act as magnetic price levels. Market-wide triggers: any Fed official comments about employment or rate policy, significant ETP inflows or outflows, major corporate treasury announcements, regulatory news from major jurisdictions. As we wrap up this analysis, let's take a step back and appreciate what we're witnessing. We're seeing Ethereum break all-time highs, Bitcoin consolidating at levels that would have seemed impossible just a few years ago, and institutional adoption accelerating at a pace that's making traditional finance nervous. The Federal Reserve's potential policy shift represents a fundamental change in the macro environment that has supported crypto's growth. Lower interest rates, if they materialize, could provide the fuel for the next leg of this bull market. But as always in crypto, nothing is guaranteed except volatility and the occasional sleepless night. Matthew Siegel's $180,000 Bitcoin target might sound ambitious, but remember where we were just 5 years ago. Gareth Soloway's warning about Ethereum's potential correction is equally important to consider. The key is balancing optimism with realism, hope with preparation. The mining industry's evolution toward AI integration, the growing institutional adoption, and the regulatory clarity we're slowly achieving all point toward crypto's maturation as an asset class. We're no longer just speculating on digital tokens. We're investing in the infrastructure of the future financial system. For the week ahead, stay alert, stay informed, and most importantly, stay rational. The market will try to make you emotional. That's what markets do. Your job is to stick to your strategy, manage your risk, and remember that in crypto, today's hero can be tomorrow's cautionary tale. Whether you're a Bitcoin maximalist, an Ethereum enthusiast, or someone who thinks the real alpha is in that obscure DeFi token your cousin told you about, remember that we're all part of this incredible experiment in decentralized finance. Some days we'll celebrate together, some days we'll commiserate together, but we're all learning together. That's a wrap on this week's analysis. If this helped you understand the market better, smash that like button, subscribe for more weekly analysis, and hit the notification bell because crypto never sleeps, and apparently neither do I. Drop a comment below with your thoughts on Powell's speech, Ethereum's breakout, or your predictions for the week ahead. I read every comment, and some of you have insights that would make professional analysts jealous. Until next week, keep your charts close, your stop losses closer, and remember, in crypto, we don't just hodl assets, we hodl hope for a decentralized future. This is Boni, signing off from Boni's Life, where we make sense of the senseless and find opportunity in the chaos. Stay safe, stay smart, and I'll see you in the next one.